Welcome to Prerona Television Canada. On behalf of Global Academy of Holistic Leadership and Coaching, we are continuing our Financial Literacy Speaker Series, Episode 4. This particular program actually in joint collaboration of a couple of other organizations too, as we are continuing these sessions. As you know, this Prerona Television is a media partner, and the host is Global Academy of Holistic Leadership and Coaching, but in collaboration of EM Management Consultants and Growth Space Financial Solutions. So we are very happy that we are continuing this session, and today is our episode 4. So we are today's session is 10 must know to know the maximize your tax refund. So we are very happy that we are continuing our sessions because we would like to share our knowledge and expertise to our community member. This particular series actually specifically dedicated to Canada because this is a Canadian tax issues, those who are living in Canada. So this particular series actually will be helping the community member, those who are living here. I know that there are many other people watching from abroad, outside Canada, but this series actually will be discussing some local tax context. So we are very delighted to have a very important person and our collaborator, Mr. Bishwajit Borua, and he's a chartered professional accountant, CPA, and also a financial consultant, and he owned Growth Space Financial Solutions. Uh, the, the Growth Space Financial Solutions provide investment, tax, and insurance services, and Mr. Borua has a lot of experience in the field of finance and in the field of uh, financial management. So, thank you very much, Mr. Bishwajit Borua, for being with us. And I welcome now Mr. Bishwajit Borua to at least share with us your session. Thank you.
Thank you. Thank you, Eduardo, for running this show continuously. And this is the time the tax season is going on. So we would like to share some thoughts with respect to the Canadian tax so that our community people, as you said, that community people are benefited out of this. And last session as well, I said one thing that if we don't know about our rights, then we can't really execute those rights and get the benefits out of these. So it's a great pleasure to communicate with you regarding some tax benefits. And today we will discuss 10 must knows or secrets. And we will give you one bonus as well that altogether we will provide 11 secrets to maximize your refunds. Now, just to introduce myself, I'm Bishwajit Barua. I'm a chartered professional accountant, a practicing tax accountant for both corporate and personal taxes, small businesses, and a financial consultant too. These two things together make me a finanius, meaning financial genius. I'm a trainer and developer of future leaders for financial industry. I provide financial confidence to individual families, and as a growth expert, I ensure faster financial progress by managing families' finance and tax together. I am an expert in first generation immigrants who are individuals and families of 25 to 50-year-old employed or self-employed people, mid-income, trying hard to realize their dreams in general, especially the financial dreams, because I am also one of you as first generation immigrant myself and have experience of managing self-employed people for over 25 years. I have exactly the same feelings and pain points as you do. That's why I understand you the best and possess the skills and expertise to develop and serve you. I can cut through the clutter, solve complex financial problems, and provide expert solutions to you for free. So all the solutions is now tax related, tax and financial solutions for free.
Thank you very much. So we'd like to now going to the main topic. That's those 10 must know how, and you will be sharing more. But my first question or I think is, can you reintroduce yourself? Why we need to know? What is the purpose of knowing the tax refund? What is the benefit for the
Yes,
taxpayer?
that's a great question. Uh, Few reasons are there. First thing, when we file tax, let's see what type of information we are sharing with the government. We basically share three kinds of information. One is our basic identification. Second one is our income information, and third one is our deductions, credits, and those information. So if we look into the first one, it's very important that all the information we are providing about ourselves, our names, addresses, sin number, all those basic information, our family composition, those information has to be 100% accurate. Otherwise, we can't even file the taxes. So that's very important on the first basis to identify ourselves. Second thing is income information. Most of us, we don't really know that this income information is, or all information are available with CRA. So even if we are not giving the right information for any reason, say by mistake we are not providing some information, uh, we are not declaring some income information, it's not going to work like that. We might be missing that, but CRA has all the information. In most of the cases, even before we get the information from our employer or the people who are we are making money from, even before getting we get the information, CRA gets all the copy of those information saved in their system. So if we make any mistakes, CRA has got the access to those information, and they will come to us and say that this information is not correct. So they will correct all those information, and the aftermaths related to those income information is obviously pay more taxes probably. So government is not really leaving us by paying less taxes. So income information, they have it. Now, the most important part, what Edward was asking is, why is it important that we are providing all the deductions and credit information to CRA? If we miss, first of all, if we miss any deductions and credit information, the person who is missing is the individual. It's me who is going to miss the credits, and as a result, we'll be giving more taxes to the government. So as an individual, we miss that. And government is rather very going to be very happy because government is getting more taxes in that case. So if we deduct less or don't deduct, government's income will be more from our taxes. So they don't really care about that. We need to keep in mind that they don't care. So it's very important that we know. And the objective of this full financial awareness series is to provide our community people enough information, basic and common and general information, so that our community people can claim all those expenses. So expenses, deductions, credit information, these are very important. We need to know. And our objective is to make people aware about all those deduction information.
Thank you very much. Now I will go actually one by one, right, about what are the actually must know
Okay.
to get the tax returns. If you can, start
Share that.
your
Yeah. Yeah.
presentation one by
Can I
one.
share my screen, Dada?
Yeah,
I'll
for
just
sure. I will just
okay. Well, I'm going to share my screen. What uh, I'll I'll request our community people and the viewers is, if you would like to take a snapshot of this screen, take a snapshot and know more about it. Then it will help you to identify all those areas if it is applicable for you. So I'm going to share. Take a snap. Get your cameras ready so that you can get this. Oops. Okay, here we go. 10 information, 10 areas that are very important. These are, I say, 10 secrets, because if we know those secrets, then we can take advantage of deductions and credits, and we can get more tax refund. First, I'll list those and I'll discuss one by one. Medical expenses and insurance premiums for medical services, childcare expenses, charity, we covered last and we will cover today as well, political contributions, northern resident allowance. For people who are living on the northern side of the provinces, there are two different zones, northern resident allowance, moving expenses. If we are moving from one place to another place for our work, study, and business, we can claim moving expenses. RRSP, that's a very big one that we can get more tax refund. Losses, we always talk about income, investment income, that if you have investment income, we need to provide that information. But today, that's a bonus that we'll cover, that if we are making any loss while investing, we can cover those loss, or we can deduct those losses as well. First time home buyers amount, we will cover that, because right now first time home buyers are probably looking for buying home, because house prices are quite reasonable now and interest rate is also quite low. And tuition, which is basically from university, colleges, and those kind of institutions, educational institutions, and we'll discuss in details of those, and professional dues. So these are the 11 common areas that we can take lots of deductions on. Again, medical and expenses, insurance, childcare, charity, political contribution, northern resident allowance, moving expenses, RRSP deductions, taking advantage while saving for retirement life, losses, investment losses, capital losses, first time home buyers amount, tuition, loan interest, and professional dues. So these are the things we are going to discuss.
Right.
One by one, we should go,
Yes,
Sarah.
so we should go one by one. Maybe if we can start with one, and then we'll discuss
Medical expense.
medical
Let's start
expenses.
with medical expense. When we can claim these medical expenses, what are the basic qualification criteria, and your situation is going to be the biggest thing. So not going into the details of the your situation discussion, but in general, uh, if our medical expenses are not covered by our employer's insurance, and we are paying from our own pocket for all the prescribed medications and all other medical services, not only prescriptions, all other medical services, we can claim medical expenses. So for qualifying criteria is any medical expenses, not over the counter medications. That's important. Not over the counter medications, any prescription medications, and the other medical services if the insurance company is not covering. And uh, there is a rule that on your earned income, I'm not going into the details of earned income, on your earned income, 3%, so it's 3% of your earned income or $2,200, whichever is lower. If your expenses from your own pocket are more than the lower of the two figures, then that extra amount you can claim, and you can even adjust your months. It doesn't need to be January to December. It could be any 12 months. You can decide on the period that you'll be claiming the medical expenses. And for your medical situation, when you are paying from your own pocket, your employer insurance is not covering, it's a good idea always to talk to your tax preparer regarding your situation, so that he can find out. It's such a big thing that it's not easy to easily provide the solution, but it's a good idea to talk to the tax preparer your specific situation and go from there. But preserve all receipts for all these credits or deductions. Preserve all the receipts, because CRA is not going to accept anything else, your credit card bill or your bank statement, debit statements. No, CRA is not going to take any of those things. So keep your receipts. And in some cases, you'll see that if you are keeping the receipts after a few months, you'll see that those are fading out and it's not readable anyway. So the other idea I always suggest is take a picture and put it in a folder in the soft copy along with the all the receipts in the another folder. So keep the hard copy and take a print, take a picture and keep it in your, or scan that receipts and put it in a soft copy. So that's medical expenses. And any insurance premium for medical coverages, if you are paying any uh, private insurance company, if you are taking medical insurance, then also those premiums you can claim as medical expense. So these are the two major areas regarding medical expenses. The next one is the childcare expenses. Right now, we are to make our dreams come true in this country. Both husband and wife, both are working, and sometimes our younger kids, they needs to be at someone's care, especially when they are under 12. So in those situations, we need to take our kids to daycares. So uh, if we are taking care of our kids in terms of providing them or letting them go to the daycares, those expenses can be claimable. It could be few $1,000 expenses. So that's a big expense that we can claim. And for that, there are some rules that when you qualify, three conditions you need to meet, or one of the three conditions you need to meet. One is your kid is going to daycare when you are trying to work or make money for yourself or your family. So you need to work. Second is you need to study to upgrade yourself. Canadian government encourages study and upgrading. So when you study and for study purposes, you are out of home, so your kids are going to daycare. And the third thing is if you are doing any sort of research that is not allowing you to take care of your kids, those type of situations, you qualify to claim the childcare expenses. Now, there are other rules as well, but I'm not going into the details. What I can tell in this particular respect is from 5,000 to 11,000, anywhere in between, depending on your expenses you are incurring for childcare, anywhere between 5 to 11,000, you can claim that. So it's uh, take the receipts and go to your tax preparer and provide that. They know how to treat those receipts and they will take care of them, those receipts accordingly. Charities. We talked about the third number, charity, last session as well. Any Canadian registered charity we can contribute to. Lots of us, we donate to different religious organizations and even international organizations like Red Cross and lots of other different organizations are there. In CRA website, you will get that list. If you go on CRA and make a query on registered charities in Canada, you will find those registered charities, you will find the list. And when we donate those, we can take advantage of those situations. If we know that these are the organizations which are registered with CRA, so we can take advantage of that. And it's a good idea to donate and take advantage of that if you want. And if some people are saying that, what, it's charity, I don't really care about taking advantage of those, I just want to contribute, that's also fine. But if you want to take advantage of these charitable donations, Canadian government encourages those and we can contribute to those. And the next one is political contributions. Right now, the situation is lots of our Bangladeshi community people are, and obviously Indian community quite a bit. We have national level Indian political figures that are engaged in politics. And as a result, lots of people, lots of us are contributing to political parties. by donating them. So those expenses or those donations are also uh, claimable as tax deductions or credits. So keep those receipts and claim, take it to your tax preparers and go from there. The next one is, Dada, let me know if any questions are coming up so that I can address those questions as well when I'm talking.
Yes, I'll let you know, right? You can continue. I will stop you if or I will interrupt you if I
Okay,
have anything. You
okay,
can
thank you.
go ahead.
Thank you. Northern resident allowance. That's the other one, the fifth one. Lots of us, in fact, as a tax consultant, I also have quite a few Bangladeshi families and individuals, both, who are living northern side of our province and different provinces, all the provinces who are living on the northern side. Uh, there are different areas that you go beyond that to the north, you can claim those expenses. You don't need to know if you qualify for that or not. There are two different types of zones according to CRA, zone A and zone B. You can claim some expenses depending on, or credits depending on how many days you are living in those northern part of the country. So you just talk to your tax preparer that I'm living in this city, check and remind them that northern resident allowance, do I qualify for it? If you qualify, you can claim those expenses. When I'm saying all these things, I just probably need to mention one thing here, because when I do the tax accounting, I understand people's psychology, and as a tax professional as well, I understand the professional suspect as well. So I just want to mention one thing here. You see, when anyone is working, say you are working, doesn't matter where you are working. If you are working at minimum pay, it's minimum pay, or if you are making 100 $200 an hour salaried, or you're any sort of consultancy you do, you take your month hourly charges, right? So just like that, uh, all the professionals are CPAs or any tax consultants or tax preparers, they go by the hours. So how much time it's taking for them to prepare your taxes and file it to CRA. Now, this is one side, timing. So we would like to get our fair share for our time. Mind it, our fair share, not something very exhaustive and very exaggerated number of amount of time or money that we would like to get a fair amount. And at the same time, we know that when we would like to get our jobs done, we would like to get it as at a minimum cost. So need to make a proper balance. If you are trying to save money, 10-20 bucks, for example, from your uh, tax preparer, that might not all the time work in your favor. Because if you are not trying to pay him his fair share for his time, then he is not going to provide enough time for you. He will just file the tax. He is not going to ask so many questions, and is not going to check what are the opportunities are there for you for all deductions and expenses. So allow him enough time and pay him as well fairly for his time, so that he can do justice to his time and to his service. So it's very important that you pay a little more but get a lot more as tax refund. That's very important, because all the things, if you want, he is providing more time in completing your job. So he needs to get a reward for his time too. Don't forget that aspect, because when you work, you want the same thing too, right? You want the same thing too, that if I'm making $50 an hour, for example, then you would like to get that $50, not less than that. Or if you are putting on more hours, then say 1.5 hours, you would like to get $75 if your rate is $50 an hour. So we need to keep that in mind always. Otherwise, it's not a win-win situation. You would like to win, but the tax preparer probably is not interested to provide more time for you. So he is not going to, ask you so many questions. He will just do, you will see this. Most of the time when you go to a tax preparer, he'll say, oh, you got your documents? Okay, leave it here, sign on this document. I'll submit it and then you come and take it. Or if I'm doing it right away, just do it right away. So it's very important that we are valuing the tax preparer's time as well. It's very important for both of us to make a win-win situation. Next is moving expenses. It's a very big amount. I know that we are not moving quite frequently from one city to another city for different reasons, but if we are moving, there are probably thousands or tens of thousands of dollars are there that we can claim as moving expenses. And it's very important to know, if you are moving, keep all the receipts, know which are the areas that you can claim all the expenses, and keep all the receipts, take it to your accountant or tax preparer and provide all the information to them so that they can claim all the expenses. Now, when you move, uh, there are some conditions we need to meet to qualify for these moving expenses. For again, three different reasons we can move and qualify for moving expenses. One is if you are moving with your job, you have a job, you are starting a new job, or you are getting a new job and moving to a new city, new province, or whatever, right? So with a job. Second thing is if you are doing business, and for doing business you are moving, so for business. And third thing is for a study. If you are studying and for study purposes you need to move from one place to another place, then you can claim the moving expenses, you qualify. But there is another condition. Condition is you need to move at least 40 kilometers closer to your new workplace, business place, or a study place. So again, 40 kilometers closer, even within the same city, if you are moving, if you are 40 kilometers closer, then you need to you can claim those expenses. So you need to provide those information, your old address, new address, and how many kilometers you are moving, and are you moving 40 kilometers at least closer to your new workplace, business place, or a study place. Then you can qualify. Now, the details of what are the expenses, or not so details, but I'll give you an idea of what are the expenses. I'll discuss those areas of expenses that you can claim for moving expenses. Again, three areas so that you can keep in mind. I love the number three though, because it's easy to remember for you people. Uh, First is before you move. Second is during the move. And third is after the move. So the expenses before you move, during the moving time, and after the moving time. Different expenses are there that you can claim. Now, let's start with before the move. Before the move, what we do, if we are living in an apartment, we may be paying some rent damages that we need to pay. If in case you need to pay, say, 1 month rent or some damage fee, you need to provide 30 days notice, or 60 days, 90 days, whatever the condition is of your lease. If you are paying those damages 1 month, 2 month, 3 month rent, you can claim that. If you are selling your place, the selling expenses, you can claim those. If you are living in a house, you are selling that property. So all the related expenses related to selling your place, you can claim those. Utility bills. If you are paying any penalty for disconnecting your utility services, then you can claim all those expenses. For any cleaning purposes, say you are living apartment, you need to clean those your apartment, or you need to clean anything, then the cleaning services, you can claim all those expenses. Now, during the move, if you are moving from one province to province, another province, then that's quite a bit of expenses. For moving all your household articles, whatever you do, whatever you pay to the movers, for moving all your household articles, you can claim all those expenses. Every single penny you expense, you can claim all those expenses. Now, that's household. But how about the family members? You will be moving yourself or with your family, all family members. Your whatever the mode of transport you are using, if you are driving your own car, during the journey time, you can expense all the expenses you are incurring. You can claim all the expenses like your fuel, your meals, your gas bills, your tolls, anything that you pay. You can claim every single thing, every single items that you pay. Now for meal expenses, there are some rules. If you can keep receipts, if it is even more with receipts, you can claim anything realistic for your breakfast, lunch, dinner, everything. But if there is no receipts you want to keep, or you didn't keep for any reason, then up to $51 you don't need to keep any receipts. You just can claim $51 per person per day. $51 per person per day you can claim without any receipts during your transport time or during your moving time. Now the third part, which is after you move, you need to uh, probably buy another home. So all the expenses that you incur for buying another home, mind it, all the expenses you can claim, including your lawyer fee, your mortgage, not mortgage, sorry, the realtor fee, everything you can claim. And then connecting all the services you can claim. And then after moving, your household articles might take a lot of time to come back. So you might be requiring uh, to stay in hotel for a few days until your stuffs are coming, you are setting up everything. So for 15 days you can claim all the hotel bills and all the meals expenses. As I said, that 51 days, sorry, $51 per person per day without providing any receipts. But mind it, when I'm saying all these expenses that you can claim, I can guarantee one thing, that moving expenses almost 100% will be audited. I have I have done so many claims, and I have seen that almost every person was audited. So keep all the receipts of all the moving expenses. That's thousands of dollars you can claim. Another thing is, say somehow you forgot to claim some expenses, and then next year you realize that, oh, I missed some receipts. I have some receipts that I didn't claim, and you can claim those expenses too for the following year. So don't think that you missed it and it's gone. Your chances are there even next year when you are filing taxes. You need to claim those expenses, and you need to report another thing, that what have you made before you move, what have you earned, in other words, what have you earned before you moved, and what have you earned after the move. So you need to report these two numbers as well. These are very important for qualifying for moving expenses, quite details. But as I said, you need any information, I provide all the information, all the awareness and education regarding tax and financial side, financial management aspect, money management aspect, I provide for free. So you can get in touch with me anytime for anything related to tax and any financial services or money management aspects. There is the number and email address. All you need to do is just pick up the phone or text me, then we'll go from there. You get all the service, my community people or anyone. In fact, it's not only community people, anyone, you can get the service. You want to?
I think we had one comments, one of those person, just to read
Great.
comments.
Uh-huh.
There are a lot of people watching, but I
Uh-huh.
don't have the comments. One of the
Uh-huh.
person, his name is he's from Edmonton, Khaled Bari Noble.
Okay.
He's an agriculturist,
Okay.
and he said as a good. He has actually congratulated us for the running this series.
Oh, thank
So
you.
thank
Thank you.
you, Mr. Noble. Thank you very much for being with us. Yeah, you can carry on. Do you have
Okay.
anything else?
Yeah,
Okay,
sure. I have covered six. I have five
six.
more.
Right. Okay.
Hopefully, we can finish within the time.
Right.
RRSP, we discussed on our last session as well, or last to last. RRSP, we discussed quite a bit of details, but today I will talk about two things only on RRSP. One is why government is encouraging RRSP and how we can take benefit of RRSP. And second thing is uh, tax planning with respect to RRSP. First thing is uh, the objective of putting RRSP or creating RRSP account is to have some savings for our retirement. Here, I would like to share some data of Canadians just to have an idea how things are working and why government is encouraging RRSP contribution or retirement savings. Are on an average, Canadians are saving only 5% of their income. Canadians are saving only 5% of their income. And in COVID situation, it's even worse because when people lost their job, some of them, even after getting CRB, CERB, some of them have lost their savings as well. So it's not 5% right now. It's probably even a little lower side. I don't have the data on that one, but it logically it should be a little lower than 5%. But this 5% savings is not good enough for our retirement. Though we will be receiving old age security, we'll be receiving CPP payment, we'll be receiving any pension plan from our employer, and we will have some savings uh, for our retirement. All those things are not good enough. That's why government is encouraging us to put money for our retirement. And first plan that they have started around 1960 is RRSP. So, and second one is TFSA. So RRSP, putting money is important. Now, when you put money, the tax planning, when you put money, say your income is $100,000, you put $10,000, so your income right away comes down to $90,000. And you pay taxes after all the deductions, of course. I'm considering that all other factors are same. Your taxable income will be $90,000. So not $100,000. You contributed $10,000, your income will come down, you pay taxes on $90,000. That's the way directly it contributes. On the contribution period, your taxes comes down. That's very important. Second thing on the tax planning part is uh, spousal contribution, RRSP, spousal contribution. This is also a very good tax planning tool. Let me explain you this part. Say spouses, two persons, one is making more income and one is making less income. So both of them has got RRSP contribution room. Now, the person who is making more income can contribute more and contribute to the low income spouses RRSP. Say one is making 100,000, another one is making $50,000. $50,000 income spouse has got some RRSP room too. So you do first thing, if you are saving $20,000, first cover up your room, and then you can contribute to your spouse's RRSP to reduce your income. You are contributing for your spouse, but you are reducing your income. That is the key thing. So you higher income spouse can reduce their income by contributing to spouse's RRSP. That is the advantage and tax planning part. So if you have lower income spouse and contribution room available, you can contribute to your spouse's RRSP and take advantage of that contribution room. That's one. On the go, when you have contributed, how you can plan your RRSP so that you can take advantage of it. It's last session we discussed that when you buy home, take some money out of your RRSP account. Usually when you take the money out of your RRSP account, you need to pay taxes in that year when you are withdrawing the money. But if you are taking money out of RRSP account under home buyer's plan, you don't need to pay any taxes. So right now, prices are quite low and interest rate is quite low. If you would like to take advantage of that, use that for taking advantage in buying home, and you need to pay that amount whichever you are withdrawing, up to 35,000 each spouse. Up to 35,000 each spouse can withdraw from our RSP account. So say 35, 35, 70,000 you can withdraw and make the down payment for your home buying. So up to 35, 35, 70,000 you can withdraw, and within 15 years you pay off that. So this is one. And then when you take the money out, there is another tax planning. When you take the money out, again, you will have spouses, higher income and lower income spouse, even at retirement. So higher income spouse can take the money out of his RRSP account, but you can make sure that your RRSP income is splitted with your lower income spouse. So up to 50%, and then you pay less tax on that 50%. So the differential, if somebody is a marginal tax rate is 30%, another one is a marginal tax rate 25%. If you are taking $20,000, 5% of $20,000 you can save. So which is $1,000 you can save if you plan accordingly. Losses. You'd like to say something, Nada?
We have a couple of questions came actually in
Sure,
between.
go ahead.
So the first question
Mhm.
from Mr. Khaled Barinobel
Mhm.
about Northern Residency Allowance. I think you covered a little bit,
Yeah,
but he wants to know a little bit more about Northern Residency Allowance.
okay.
First question, yes, go ahead.
So that's are different zones are there, zone A and zone B. One zone is just above, say, Edmonton, north of Edmonton, and then you go far. Say, I'm just giving idea from Alberta because we have a better idea which cities are where. The places like High Prairie, Slave Lake, those places, and few hundred kilometers of about 200-300 kilometers north of that, those places are in one zone, get lower rate. And even beyond that, there are other small places where probably 200-300 population are there in different cities. Those cities are also getting some northern resident allowance, but their one is quite high. And just to add or provide you provide especially Novel by some more information is, say some people are living there and there is no doctors, no specialists. So those people are coming to Edmonton or other big cities to get the treatment, to meet the doctors. In those situations, the travel expenses, the parking, hotel, everything can be claimed. So those are other benefits that northern residents can get.
We
But
have a question. Oh, sorry, go ahead.
but if you have any specific question, like say I live in Red Earth or whatever, just give me the name, and I can provide you which zone and what is the rate that you will be getting. You understand one thing, Novelbai and all other viewers, that it's not possible for anyone to memorize all the names, but wherever you live, if you come to me, you ask whatever the question is, which city I'm living, how much I get, and how can I get that, I'll provide all those information.
Right. The second questions that we have is, can we claim for home office expenses during the COVID time? And is it a lump sum payment, or office manager will or will provide a letter of claim of your expenses?
Okay, that's a good question. We covered last week, but
Last
since the
week.
question came in, I think our viewers, some of the viewers, of course, missed that part. It's home office expenses during COVID time. To qualify for it, there is only one condition. It's consecutive 4 weeks. Consecutive 4 weeks, if we are working at least 50% of our work time from home, then we can claim it. So consecutive 4 weeks, minimum 50% of our work time, if we are working from home, we can claim home office expenses. Now, there are two different calculation methods CRA has devised for us. First is flat rate method. You don't need to provide any document for that. All you need to calculate is how many days you worked. After qualifying 4 weeks and at least 50%, how many days you work from home. If you can figure out that you can claim for those days, and the rate would be $2 per day, and maximum $200 we can claim. So maximum $200, $2 per day. So maximum claim we can make is $400 for 2020 only. So these calculations are available on home office expenses for only COVID-19 or 2020 situation. And there is a detailed method as well. And detailed method is a little complicated. You can claim lots of expenses, but the advantage is those are covering lots of different areas. Now, for detailed method, qualifying criteria again, 4 weeks at least, 4 consecutive weeks, minimum 50% of our job we need to complete from our home. Only then we qualify. And second thing is we need to get a T2200 form from our employer. T2200, T2200 or T2200S or T777S. These 3 forms our employer needs to provide. If they don't provide, our employers are not providing that form, we can't really claim on a detailed method. And detailed method calculations are quite complicated. It's like how much of a space you have used. Say you have 1,000 square foot home. Out of that, how much space you have used, and proportionately you can claim that expense. Size of your room. Now, there are 2 different ways in that respect as well. One is if you have used any dedicated or designated room, say out of your 1,000, a 10 foot by 10 foot, which is 100 square foot or 10% of your home, you have used an extra bedroom you have used, you can use all the expenses proportionately, 10% of your all expenses that you incur. So that's the one. But if you are using the common area, that's a little bit different. If you are using common area, then common area has to be proportionate again, based on how many hours we have used that common space. Say out of 24 hours, we have worked 8 hours. So 10%, according to before calculation in our previous example, 1/3, if we are using 8 hours of 24 hours, then 1/3. So 1/3 of 10%, which is say 3.3%, we can proportionately use all the expenses. Now, what you can't claim, you can claim lots of things, but what you can't claim is your mortgage payment, the principal part, you can't claim. If you are making some capital expenditures, like you are buying furniture, wall decorations, those we can't claim.
Sounds good. I have a question.
Yeah.
Another questions came from student.
Yeah.
Like on behalf of a student, he's
Uh-huh.
asking actually,
Uh-huh.
can we claim U-Pass or transit pass expenses in tax return? Think
U passes were available, but this year I didn't see any U-Pass. I didn't see any opportunity there, but the tax credits are there. I think you can claim it still.
no, I think transit part is no longer, if I'm not mistaken,
Transit is not, but for U-Pass, for
for U-Pass.
students, U-Pass, I'm not 100% sure this year.
Right.
Transit is not available from not last
Yeah,
year. I
I think
think
for a
it's
couple
the
of
year.
years, I guess
Yeah,
transit is
couple
not
of
available.
years.
Yeah, we can get
U-Pass,
clarified. Yes, for
yeah,
sure. Thank you very much
yeah.
for asking the question. I think there are a lot of other people watching, but you
Okay.
can continue our rest of our, I think, topics.
Okay. So losses, the one that I was discussing is income when we make capital income, when we invest our capital in stock market, those kind of things, shares and the stocks, we make money, that income has to be reported. At the same time, we can claim those losses as well. Mind it, if you are losing, don't be disheartened. When you make money, you pay taxes. When you lose money, you get advantage of losing money as well by paying less tax. Take advantage of that too. And all you need to do is take all those papers that you sold, purchase, all those documents, statements, and your tax preparer or accountant will take care of everything. First time home buyer amount. Since lots of people are buying home at these low prices of home, plus the low interest prevailing right now in the market, whoever is buying the first home will get we don't have anything for provincial credit, but for federal credit, we have $5,000 credit we can claim. And 15% of that 5,000, which is $750, we can get right away. and GST as well. If we are buying new homes, we can get GST credit as well. So two credits are there. One is if you are buying brand new home, you can get GST credit. And second thing is if you are buying first time, second time, does a new home or old home, doesn't matter. If you are buying first time, you get $750 right away credit. You get more money. Said you didn't report that or you didn't buy home, you don't get 750. So $750 you will get back. That's a very good one. Take advantage of that. All you need to do is it has to be a qualifying home. Qualifying home means you or your spouse didn't own any home in last 4 years. So say you are buying a home in 2020, you bought a home in 2020, 4 years before that. So 19, 18, 17 and 16. So 15 you might have a home. After 15 you didn't own a home. Then 16, 17, 18, 19 you didn't have any home, you or your spouse. Then in 20 you bought again. You can take advantage of that. First time home buyer. Now moving on to the next one, tuition and any education expenses plus loan interest. Three things we'll discuss here today again. Tuition. If you have a tuition credit which is T2202. T2202 from your educational institution, if you have that, provide that to your tax preparer or accountant, you will get lots of credit. Even if you don't make enough money right now, nothing to worry about it. All those credits are carryable to forward carryable forward to your future years, so that when you start making money, when you get a professional job, you can claim all those credits available in your account. So don't forget that. Sometimes I see that lots of people say say claim it next year, but don't do that. Claiming it next year is always difficult. Let me give you an analogy in any aspect, especially on this one. Say you are making a home and you would like to get kitchen, washroom, those things, and it's very easy to accommodate all those changes when you are making the home new. But you build a home, after that you would like to make a washroom, you would like to make a kitchen. That might be very difficult for lots of different reasons. Say your electrical connection, your water connection, your sewerage. And think about something like a big unit is getting into your home. You might have to break the walls even, right? So it's similarly, your tax things, when you are doing it in a certain year, complete everything and carry forward those credits. That's even better than claiming it later. I'm not saying that you can claim later, but it's more cumbersome. So don't get into the trap of a cumbersome situation. Rather, make your life easy. Claim in the current year, your credits can be carried forward. So tuition. Second aspect is sometimes we upgrade ourselves by spending money, taking courses on different things. For those expenses, we don't get T2200 from our educational institutions, but still we can claim those expenses. So keep those receipts and provide it to your accountant and tax preparer. Whatever it is, it could be from anywhere in Canadian institutions, or it could be out of Canada. You are taking courses from wherever it is, whichever country, you can claim those expenses. And third thing is, lots of our kids are now getting into universities and they are taking money, taking loans. And when you have student loan, you pay interest on that too. So don't forget to claim all those interests expenses. You can claim interest expenses. Take those receipts and go there. If you forget it for any reason, if you forget it even, take it to your accountant or tax preparer so that everything can be accommodated even in the later years. Don't miss these things. Thousands of dollars you can get back from taking advantage of these situations.
We have a question.
Sure, Dada.
There is a question. What is the problem if we have more than, I think, one T4 at the time of tax return?
Okay.
From Temia Borua.
Okay. Okay. More than one T4s. Okay. That happens that when we work for more than one places, then we get T4s. from all those employers. Now the challenge is, say I'm making $30,000 from one employer and making $10,000 from another employer, or say $20,000 from another employer. Now, the $30,000 employer, they are deducting taxes at source based on $30,000 income. So they know that if you are working for so many hours at this rate, how much you will make, and depending on that calculation, they deduct the taxes at source. Now, the second job where you are making $20,000, they are considering, they don't know that you are working in another place and making $30,000. So they deduct all the expense, all the taxes and CPP, everything based on $20,000 income. Now, what is the reality? Reality is your income is neither 30,000 nor $20,000. Your income is 30 plus 20, $50,000. And when you pay tax, it's based on $50,000. Now, obviously, when you make $50,000 or even more, you pay more taxes, not $30,000 or $20,000. You pay taxes on $50,000. And it might be happening that the first slab is $47,000. And the second slab, above $47,000, you are on the next slab. So instead of paying 25%, you pay 30.5%. So your tax brackets are going up. You pay more taxes. So when you file the taxes and these things comes together, lots of cases, instead of getting something few $100 back, in lots of cases, you pay a little more to the government because your income is in reality $50,000, not 30 or 20.
Right. Thank you. I think, do you have any other
Just
things to?
a small one. I can't
Yeah.
remember because I participated in few sessions. Professional dues. So I
Yep.
don't know if I discussed last time.
I
I've,
think we discussed a little bit, but I guess we can continue still for the
okay,
benefit of those who are
okay.
watching us.
Who
We can
missed
discuss.
probably the last time,
Yes.
last session. So we have, especially in Alberta, and I know that in Ontario as well, lots of professional Bangladeshis are working, lots of professional areas we have that people are working in, especially in Alberta, like say engineers, geologists, doctors, of course, and any health related health industries, healthcare industry is paying lots of fees. So these fees, professional industry, say, I'll give my example that will be easier to understand. I'm a CPA and I pay membership fee, yearly membership fee, 1100 something. I pay every year. So these are professional dues. Because I'm a member of CPA Alberta and CPA Canada, I pay that fee. So lots of us, doesn't matter where, if the professional association membership is there and you are paying a membership fee, every year we can claim those expenses, including the GST or GST, PST, and HST, whatever the situation is applicable according to the provinces. We can claim all those expenses. So professional fees are very important because it's few $1,000s. Sometimes it's even 15, $20,000, $30,000, especially for doctors. So claim all those expenses when you are filing your taxes. Don't miss those thousand.
There is one more question.
Yes, Dada.
Can we claim professional online courses from Udemy, like
Professional
from
online
different?
courses.
Yeah, professional online courses from Udemy. Udemy is kind of an online company. They provide a lot of short courses. So
Okay,
can we claim those expenses?
I'm not sure about that particular organization, but if you are upgrading yourself and spending money to upgrade yourself, you can claim.
Yeah, I guess there is a $2,000 of, right, or the some expenses for the training upgrade for this
Uh-huh.
year. I'm not sure, but yes,
It's claimable. Go to
it's
your accountant or tax
to
preparer.
account.
It's claimable.
Right. Thank you. So I guess we covered most of the part.
Yeah,
Thank you
10,
very much.
11.
I think next session we'll be covering more. And please do don't hesitate to ask question, and also request if you like to have a custom session, like for according to your request. If it is possible, we'll be happy to organize. Uh, so you can also write to us at info@prerona.tv or contact@gahlc.ca, or you can also write to our social media platform, to our Facebook messaging, Prerona TV, and also Global Academy of Holistic Leadership and Coaching. Thank you very much, Growth Space Financial Solutions, yeah, Mr. Bishwajit Borua, for your time, and thank you very much for
Thank
your
you.
community support. I know the CPA are expensive, we have to pay a lot of money, but you have passion, you have love for the community, and you have spent your valuable time for the community member, so that we can create awareness and we can help our community. And thank you very much for your passion. Thank you very much for your commitment to our community. As you know, this particular series, financial literacy series, is a continuous series every week. Financial literacy speaker series. Today we just completed episode 4, and these episodes are all available our official YouTube channel of Global Academy of Holistic Leadership and Coaching. We'll be sending after the sessions. This will be uploaded in our official YouTube channel. It also be posted in our Prerona TV link. You also can get in from Prerona TV, also from Global Academy Holistic Leadership. Thank you very much, Mr. Bishwajit Borua. Thank you for your
Thank
time,
you.
and we'll be continuing our next session. So please be with us, and we are here for you, and we like to make sure that we are doing our social responsibility for our community. And may Almighty bless all of you. Stay safe and stay healthy. Take
Thank
care.
you.